stocks I own, June 2018 edition. Welcome in, guys. Today I tell you my 4 biggest investments as of right now going into June 2018. Hope you guys really enjoy this as always. Basically what I've done today is I've done 10 different categories, okay? So instead of just kind of taking you through like the reporting and whatnot I usually do, I basically created 10 vital categories that when I look at a stock, I want those stocks to have. And we're gonna basically answer these with a yes or no, okay? Not only am I gonna tell you my 4 biggest investments, but I'm also going to tell you if they meet these criteria based on a yes or no answer. There's no like middle ground here. There's no like, oh, maybe they do or whatnot. It's either a yes or a no all these stocks get. So I really hope you guys enjoy this as always. By the way, make sure if you're newer to the stock market, you check out that 3rd link in the description. That's my 11-part stock market investing mastery course. That goes into everything I look for in a stock into detail. Also has a private email address to contact me if you have any questions in relation to the course. If you're someone with over $10,000 invest in the stock market, make sure you click that first link and join my private stock market membership group. There's so much value to be gained in that group. You got to get in there, guys. All right, let's get into this. So my number 4 biggest investment of all is a company named Toll Brothers. Toll Brothers is my 4th biggest investment right now. They're a luxury home builder, all right? So let's look at the categories. So understandable. This first category, what that means is, can I fully wrap my head around the business? It's like circle of competence. Like, can you fully understand the business? Toll Brothers case, absolutely, without question, okay? By the way, I will never, ever, like this always has to be a yes, understandable category. Like I would never, ever touch a stock that did not meet this criteria. It's just not worth it, guys. It's too, if you can't understand the business, like don't be in that stock, okay? Short-term growth. Does Toll Brothers have short-term growth? Yes, they do. They're pretty much growing everything across the board. If you look at just about every single metric, they're growing it right now. Long-term growth over the next 3 to 5 years. Does this company have long-term growth going for it? Yes, they do. They would meet that criteria, okay? And last one, huge long-term growth. This is in relation, obviously, I'm talking mainly about revenue and net income when I'm talking about long-term growth. This one's huge. So what I mean by huge long-term growth is I'm talking over the next 3 to 5 years, can this company realistically double or more their revenues in profits? In my opinion, yes, they can. Unless we have some type of massive recession over the next 3 to 5 years, Toll Brothers is a name that I could definitely see doubling their net income, doubling their revenue over the next 3 to 5 years based upon how much growth that company has going for it and moving forward, okay? Next one is in relation to the balance sheet, okay? So do they have an okay balance sheet? I would say yes, they do have an okay balance sheet. It's just okay. Do they have a great balance sheet of Toll Brothers? No, okay? They do not have a great balance sheet. Now, mainly when I grade balance sheets, I grade them on industry, okay? So a home builder, I'm gonna grade their balance sheets differently than I might, grade a semiconductor play. Semiconductors are highly volatile. A company could drop them or something like that and the business could be devastated. Those companies almost need to have a great balance sheet, okay? So I grade it based upon each industry separately, all right? Low forward PE ratio. What I mean by low forward PE ratio is it under what the market's trading at. I think right now the market's somewhere around a 16-ish on a forward PE ratio basis. Toll Brothers is at somewhere around a 7 or 8, guys. So do they make that criteria of being a low forward PE? Yes. I love forward PE because that's basically telling me what the net income is expected over the next 12 months versus what that market cap is. Gives you an idea of valuation, how overvalued or undervalued a stock is in relation to what their actual earnings are, all right? Great management team, absolutely. At Toll Brothers, one of the best management teams out there. I would say they're definitely the best in home building, in my personal opinion. They've been there for a long time. They really know what they're doing, and the way they've grown that business over the past decade, coming out of the recession, not only getting the business through the recession and not having them go out of business or something, and they came out of the recession pretty strong, but then the way they've grown it since the end of the recession around 2009, 2010 has been phenomenal. You look at their earnings growth over the past, let's say 7, 8, 9 years, it's phenomenal, guys. So absolutely great management team there. Is Myers coming? So Myers coming, what that means is it's like there's a villain, Michael Myers in the Halloween movies, okay? Serial killer that comes up behind people and takes them out, okay? So is Myers coming? This basically means for a company, is there someone coming behind them that's gonna knock them out, that's gonna come take their market share, that's gonna force this business to lose market share, to lose revenue, to lose net income, and maybe go out of business someday. In Toll Brothers' case, space? Absolutely not. There's no Michael Myers coming for them, okay? You know, there's no one out there that's really like, you know, a big competitive threat to Toll Brothers. And then does the company pay a buyback or dividend? You know, do they have some type of basically capital return structure going for investors? Absolutely, they do. They have a very big buyback going right now. So yes. So needless to say, based upon all this, you can see why I'm pretty excited about Toll Brothers, guys. Coming in at stock number 3 is a company named Eli. Well, really the company's name is Callaway. Ticker symbol is Eli. Callaway Golf, it's a golf company. They sell golf clubs, they sell golf balls, anything that's in relation to golf. They also have some basically clothing lines. I actually have a Travis Matthews hat over here. Travis Matthews is a clothing brand that's owned by Toll Brothers. They also own OGO. They also have 15%-ish investment in Top Golf, which is, you know, expanding all around the United States. A lot of exciting stuff going for that business, all right? So let's talk about this. Is it an understandable business? Yes, without question. All these are going to be yeses, okay? Short-term growth. Does Callaway have short-term growth? Absolutely. Their short-term growth is unreal right now. I think they grew revenues 30-something% last quarter. They upped basically what they expect to make for EPS for the rest of the year. Like a lot of short-term growth with the company. Long-term growth over the next 3 to 5 years? Yes, absolutely. I see a lot of long-term growth with this company, okay? Huge long-term growth. Can I see this company doubling their revenue and doubling their EPS within the next 3 to 5 years? I would say no. I would say barely no. I could see them definitely, you know, increasing quite dramatically from here. But can I see them necessarily doubling or more over the next 3 to 5 years? No. I think if they did that, it would be a surprise even to me. I definitely see the business growing, but not like that type of growth, all right? Although they do have phenomenal growth right now. Okay balance sheet. Yes, they do have an okay balance sheet. Great balance sheet? No, I wouldn't put it in the category of a great balance sheet. Low forward PE ratio? No. This company, I think on the forward PE ratio right now, somewhere around 21 or 22, but this company is a company that has, you know, good long-term growth going for it and phenomenal short-term growth going for it right now. So when you factor that in, a lot of times those type of companies are going to get a little higher forward PE ratios. And then when you factor in the fact that they got this investment in Top Golf, which is probably worth somewhere around $400 million now, and going forward probably more and more as Top Golf continues to get built out and as they continue to get bigger and bigger profits. Like when you take that into account, like that's a lot of money, especially with a company that I think has a market cap of less than $2 billion. We're talking about they got an investment just chilling over there that's worth $400 million plus right now, guys. So you're going to command a higher forward PE ratio when you got all that going for you. Great management team? Absolutely. This company is so phenomenally run over the past few years. They've really turned around the business in a big way, even in a weak golf environment that really, you know, crept in 2014, 15, and 16. They still, you know, kept the business on track and got it to a place where it could grow. Is Myers coming? No, I do not see Myers coming for them. They're the same competitors. They've been in a long time in the golf game. There's the Nikes of the world, there's Titleist, and all those type of brands. They've been around for a while, so do I see Myers coming? No, I do not. And yes, they do. They actually do a buyback and a dividend, this company. So needless to say, you can see why I like Eli. Coming in at my second biggest investment as of right now is a company named Cruisy Doozy, otherwise known as Cirrus Logic. Ticker symbol CRUS, Cruise. So Cruise basically makes a ton of audio components that go into your smartphones. Their biggest customer by far is Apple. They also have Samsung as a customer, although they're a much smaller customer. Basically, they have to do with the whole audio signal chain of devices, all right? And voice is growing to be a bigger and bigger thing, whether it's people, you know, talking to their smartphones and, you know, scheduling things, whether it's people with Alexas in their home or Google Home or Apple HomePod, or people wearing devices, you know, that are wireless devices in their ears and they can talk to them and whatnot. Everything voice is a big category that is growing right now. And a direct beneficiary of all this growth is Cirrus Logic, okay? So a company I'm very excited about, needless to say. Understandable? Absolutely. It was a company that took me a long time to understand this. Like I've been in and out of Cirrus Logic many times since like 2012 or 2013, somewhere around there I found the company. And it's definitely a company that's going to take some work for you to fully understand. Like their business is not like some type of simple business or something. There's a lot that goes into it, but now I've gotten to the place where I fully understand the business, and that's great. Short-term growth, this company does not have short-term growth going for it right now. Basically, they're changing out some parts with Apple and whatnot. Sometimes, you know, Apple can, you know, take down a supplier's inventory while they're waiting for the next supply to come in for the next iPhones and whatnot. So right now, Cirrus Logic does not have short-term growth. Right now, it looks like the company is shrinking in the short term. Long-term growth, absolutely. Long-term growth over the next 3 to 5 years, without a doubt, with all the things they got going for them. Huge long-term growth. Can the company double or more? Absolutely, within 3 to 5 years. When you look at voice biometrics, what that can do for the company, when you look at, all the different features they can add into smart codecs, when you look at Samsung possibly becoming a huge customer of Cirrus Logic once again, okay? All these different factors. When you look at voice category growing and getting bigger and bigger and bigger, and devices needing more amplifiers, microphones, and all this stuff is playing right into Cirrus Logic's sweet spot. When you look at Cirrus Logic expanding into the microphone business, and phones have sometimes 3, 4, 5 microphones. This is a business Cirrus Logic's going to really start expanding into over the next year or two. It's just a ton of growth out there. So absolutely, I can see this company doubling or more revenue and profits over the next 3 to 5 years. Okay, balance sheet. Yes, absolutely. They have a great balance sheet. Okay, their balance sheet's phenomenal. No debt on that company. A lot of money in cash and investments. It's pretty much as good as you can get a balance sheet. Low forward P ratio. Yes, I think the forward P ratio, if I recall, on Cruise right now, I want to say is a 10 or 12, something really low. It's a very low 4P ratio. Great management team, unbelievable management team. When Jason Rode took over this company in 2000, it was around 2007, 2008, this was like a $5 stock company, okay? This was a $5 stock. The revenues were somewhere around $175 million when he took over this company, $175, $180 million. And this is a company that will do, easily $1.5 billion in revenue this year, maybe even close to $2 billion, depending on how the back half of the year goes. And long term, this is a company over the next 3 to 5 years that should be, somewhere around $3, $4, $5 billion company as far as the revenues coming in. So he's changed the entire game. The CFO and him have changed the entire game. So great management team, absolutely. And they, got in with Apple at the right time and been able to keep Apple like this. Very close relationship there. Is Myers coming? Absolutely not. There's no one that's coming in Cirrus Logic space. If anything, Cirrus Logic kind of represents a Michael Myers to all companies competing in the audio chain and competing in audio in general. They're kind of the Michael Myers, if anything. And buyback or dividend, they don't pay a dividend, but they do have a buyback on right now. So they are focused on capital returns. So needless to say, I'm very excited about Cirrus Logic. That's why it's my number 2 stock. And lastly, my number 1 biggest investment, and this one's my biggest investment by far, is LB, ticker symbol LB, which stands for L Brands. They own Victoria's Secret, Bath & Body Works, Pink. They own a few other smaller brands and whatnot. And this is a position that might be my fastest growing position I've ever had in terms of me funneling new money. Like, I don't even think I had any money at all invested in L Brands. And if I did, I had like very small amount. And we're talking about 3 months ago. But over the past 1 to 2 months, I have stuck a phenomenal, ridiculous amount of money into L Brand stock over the past month or two, and is now by far my biggest investment, guys. So understandable, yes, absolutely. This might be the easiest business to understand. Like, they sell underwear and bras and lingerie and some clothing. Like, this is not a complex. Like, don't matter who you are or what level you're at with stock market investing. Like, L Brands is probably a business that represents one of the easiest businesses to understand out there. Okay. Short-term growth with this company, well, it's kind of a yeah. We'll give it a no because the net income's not growing right now, but the revenues are growing with this company. But we'll give it a no since net income's not growing at the moment. Long-term growth with 3 to 5 years, yes, I definitely see long-term growth with this company, what they're doing in China, the expansion they can do there. Hopefully getting Victoria's Secret back on track and expanding that brand. I absolutely see this business as a long-term growth company over the next 3 to 5 years. Do I see huge long-term growth with Victoria's Secret as far as them doubling up or more their revenues and profits within 3 to 5 years? No, I don't think this is going to be a business that, 3 years from now, 4 years from now, 5 years from now is going to have double the net income they have now, double the revenues they have, triple the revenue. Like, I don't see that with this business. It's just a really solid company, okay? Okay balance sheet, yes, I would give them an okay balance sheet. Great balance sheet, no, I would not give them a great balance sheet. They have quite a bit of debt in that balance sheet. It's much less than many retailers, and they also have a ridiculous amount of cash. I think they have something around $2 billion in cash on that balance sheet. So I would not give them a great balance sheet. I would just give them an okay balance sheet for their industry. Low forward PE ratio, yes, they're somewhere around a 10 forward PE ratio on that company right now. Great management team. I really want to give this one a yes. I really do. But for one reason, I'm going to give them a no. And that's because the person that's in charge of Victoria's Secret right now, I don't think they've done a very good job. They've not been able to grow physical store sales at Victoria's Secret. They have been able to grow direct online sales with Victoria's Secret brand, but they have not been able to grow the physical stores, all right? And that's no excuse because guess what? L Brands owns another company named Bath & Body Works, right? They're growing physical retail stores as far as the same store sales very strong right now, okay? So there's no excuse for Victoria's Secret brand to say, oh, we can't grow physical store sales right now when Bath & Body Works has phenomenal growth. Bath & Body Works had around 5% same store sales growth over the past quarter, okay? That is very strong. While Victoria's Secret had around negative 5% same store sales in the physical retail stores. So for that reason, I can't give them a great management team. If I had a category for good management team, absolutely, because Lex Wexner and the guy that's running Bath & Body Works right now, some of these guys are phenomenal. It's just the particular CEO in charge of Victoria's Secret, I'm not a big fan of right now because they're not growing comp store sales. I got to really see them start growing comp store sales again as far as physical retail sales go to really give them a great management team. Next up, is Myers coming? No, absolutely not. Who's coming in lingerie? Who's coming in, underwear sales or bra sales or any of that type of stuff? In my opinion, no one. Are there tons of places that sell underwear and bras and lingerie and stuff like that? Yes, there's always been that. That's always been the case going back throughout time. But any woman that has any type of, decent money, chunk of change to spend, they're shopping at Victoria's Secret, guys. So is Myers coming? No, there's no one in particular coming out there. And buyback or dividend? Yes, they pay a ridiculously big dividend, which I wouldn't mind. I would love them to cut that dividend and up the buyback more, if anything, or spend more money on stores and whatnot. But yes, they pay a dividend, and they also do have a nice buyback on right now. So that is why I love L Brands there. Let me know if you guys own any of these 4 stocks. I would love to hear from you guys. Those are my 4 biggest investments going into June 2018. Thank you for watching. Have a great day.